Good morning traders and welcome to the week ahead. It's Carlo from Blueberry and let's take a look at what is top of mind for traders this week. The US-Iranian conflict enters its 12th week. We already saw a bit of an escalation on Friday night that impacted markets, and of course over the weekend Trump made a comment saying the clock is ticking. So there doesn't appear to be any end in sight right now around this US-Iranian conflict. Where are we right now and what are traders looking at this morning and what they have been looking at last week? Well, you've got US dollar has risen due to the increased escalation out of Iran, and we're seeing the US dollar index push up to 99.3. Now the US dollar index has been in a broad range of 96 to 100.50. They're the key levels to watch out for, and that impacts all other currency pairs. We've seen obviously high US dollar and the gold price fall. Gold price down 3% to $4,500 this morning. Silver's down even more sharply to $76.50 due to the stronger USD and risk off more broadly. The oil price is higher. West Texas crude up at $106 a barrel, with Brent up at $111.50 US a barrel. We've seen Bitcoin fall back below 80,000 US a coin. In fact, it's trading around 77,800 this morning, and US equity indices that have had 5 to 6 weeks of strength came off a little bit on Friday, down 1.5% on Friday. S&P around 7,400, Dow Jones 30, 49,400, and the Nasdaq 100 will be closely watched this week. It's around 29,000 at the moment. Why is Nasdaq in play? Well, we have Nvidia corporate earnings to be released this week. Let's take a quick look at the week ahead, because there's plenty of data coming out that may impact equity markets, interest rate expectations, currencies, and commodities. First of all, we've got on Tuesday, as the data starts to ramp up, Japan GDP coming in around about 0.4% for the quarter, or 1.7% annualized. A slight lift there. Inflationary expectations have increased somewhat. Not sure if this is enough to get the Bank of Japan over the line for a near-term rate hike in Japan. Nevertheless, Nikkei 225 and dollar yen will be in play. As you know, dollar yen is advancing towards that 160 mark, well and truly above the levels that the Bank of Japan has already been expected to intervene. So take a look at that 160 area if we get close for dollar yen. In Australia, we do have the RBA meeting minutes. Probably not expecting too much from this, because in the previous RBA meeting, the RBA did increase by 25 basis points to 4.35%, and the Governor, Michelle Bullock, did say that inflation is a concern. That was before the Australian budget. The RBA is watching data, and of course, they've spelled it out quite clearly to us that if inflation continues higher, then they may require further rate hikes. And the Aussie is therefore being one of the stronger currencies. The Aussie US has dipped a little bit from above 72 cents to 71.50. But you've got two strong currencies there. The Australian dollar, given recent rate hikes, and the US dollar as well too, has been quite strong due to the safe haven status it is receiving around this US-Iranian conflict, and the fact that inflation last week, US CPI and PPI, have been stronger than expected. So traders trading the Aussie versus US may look to trade that range of 71 cents to 72.50. Further in the week, we've got UK employment data coming out, around 25,000 jobs expected, similar to the previous month. Not a lot happening in the UK. Cash rate is 3.75% there. Inflation is around 3%. I think an employment number of 25,000 jobs may not move the dial for the Bank of England, which remains on data watch. Later on Tuesday night, the Canadians release their consumer price index, and the consumer price index is expected to moderate a little bit from 0.9 to 0.6%. In the UK, as mentioned, this is a CPI number coming out. It's also expected to moderate from 3.3 to 3.0%. So will the Bank of England hike rates in the near future? They may not be enough to move the dial if the CPI is coming off a little bit, and if employment growth stays around 25%, 25,000 jobs. Over in Europe, the European CPI is also out 3%. But the main event this week is the FOMC minute meetings. And it'll be important for traders and investors to look for any kind of signals from the Fed to see whether some of the Fed members are looking ahead to possible rate increases in 2026. Of course, we expect comments around increased inflationary expectations given the US-Iranian conflict and also high oil prices. But it'll be important to see what each of the voting members say in the FOMC meeting minutes. And that is very likely to impact all markets: gold, silver, interest rate expectations, of course, equity markets and currencies. On Thursday, it's a big day in Australia. We do have the employment data. Expectations, these expectations are from Bloomberg. The total number of jobs to be created is expected to be around 15,000 jobs. But the key number for Australian employment data is always the breakdown, and it's the full employment change. Now, last month we saw a massive increase of 52,000 new jobs. Will we see something similar to that? Will we see a detraction from full-time employment? That is the key. So you think the Reserve Bank has been confident in increasing rates because not only is inflation too high, but they're also seeing the unemployment rate 4.3%. They're seeing jobs being created, in particular full-time jobs. And that gives the Reserve Bank confidence to continue increasing rates to try and slow the economy and thereby trying to reduce inflation. So this number will be massive on Thursday and will likely impact the ASX 200. The ASX 200 has been underperforming here in Australia. 8,600 at the moment, has been going sideways for the past few weeks. Will we see very strong employment number this week? And will we see downward pressure on the ASX 200 and perhaps upward pressure again on the Aussie dollar versus other currencies? On Thursday, later on in the evening, we get the German manufacturing PMI data, expected to be around about 51. We also get manufacturing PMI data in the UK and also United States, which are expected to remain strong above that 53 level. On Friday, we do have retail sales in New Zealand. The consumer spending is expected to moderate from 0.9 to 0.6, may impact inflationary expectations in New Zealand. You may recall that the last meeting, the RBNZ stayed on hold, but they are watching data very closely to see if there's any kind of inflationary expectations going forward for New Zealand. On Friday, Japan CPI is expected to come in around 1.7%. And again, this may impact the US dollar versus yen, any yen crosses, as well as the Nikkei 225 index. Later on Friday evening, we do have retail sales out of the UK. Bloomberg estimates are for a negative 0.6%. So you've got plenty of data coming out this week out of the UK. And if it comes out as per Bloomberg forecasts, unlikely to move the Bank of England's dial in terms of any near-term rate hikes. And this could adversely impact the pound sterling versus US. You may see on the daily chart here, the pound sterling has been falling quite rapidly over the last 4 or 5 days against the US dollar. That may continue. We will find out later on this week as we get plenty of UK data. The Canadians also release retail sales where the consumer is expected to moderate their spending 0.6% for the month. You've got Canadian cash rate of 2.25%. The Bank of Canada seems to be on hold right now, watching data. And another key event through the week is US corporate earnings. We do have the big one. It is Nvidia. They're reporting their earnings, I believe, after the market close on Wednesday, together with Walmart and Home Depot, which are some other major companies to report this week. So plenty in store for traders who are trading gold, silver, even Bitcoin, currency markets and US equity markets this week. Good luck with your trading, and I look forward to seeing you in the next video.